Ladies and gentlemen of the crypto space, we're live on a Wednesday, April 9th at 12:51 p.m. And where to begin? And how do we fold this into a conversation that could be relatively short and relatively constructive, informational, useful? So basically, yesterday was tariff deadline at 12 noon, and tariffs got applied at 12 midnight. And just after midnight, all hell broke loose, and we've seen some absolutely fascinating volatility up, down, reversals, intra evening trading in markets that actually count, not equity indexes or ETFs, which don't that's the noise. The signal is what manifests the price action in the equities markets or the crypto markets. It's all noise. That's all downstream, a repercussion of everything that's occurring in the financial system, the monetary system, the actual plumbing and the way things work, which is why we've talked so much about dollars over the years, and that's why interest rates are so meaningful because that is telling us the story of collateral pricing. And then we've told the story of how collateral is used to manifest currency units. So it's all connected. And that is the signal through the noise, the currency markets and interest rates, which is the other side of the collateral pricing. So from a technical standpoint, we saw a massive volatility in the dollar, especially against the Chinese yuan, which is right now backed up against the wall. I'm looking at the 4 hour, which will drive anyone mad, but suffice it to say, it is right at the limit. A 2023 high breached through 2022, and that is why we saw the rapid rise in 10-year yields, 10 to 30-year yields in treasuries, because someone was selling to manage this cross currency um, value. They wanted to prop up the value of the yuan compared to the dollar. Now, obviously, there's other components in play because as they sell, that drives interest rates up, and that causes all sorts of distortions in what is the hot phrase going around, the basis trade, which is the differential basically between spot price and futures contracts, which allows leverage. Because if you're able to buy something and then short it, when you short it, you're selling something you borrowed and you're able to rebuy it and leverage. And that's how looping works in traditional finance. So the whole system is leveraged to the tits. The big short uh, meme that we all know too well, and that unwound to a degree. Now, clearly today things have stabilized, at least from a price action standpoint. Um, Indices, Nasdaq, S&P, 1.4% currently on the day. Bitcoin back up at 78,000, which is insane. Curve back at 48 cents. But 10-year yields, I mean, that is just a crazy. That's just crazy. And how do we know it's crazy? This is the print on the move indicator. Now, here's the kicker. If I saw the move indicator at 139, I'm like, um, something's broken. And then I go and find not Bojangles, who's absolutely on a tear with social media. Um, this guy, Convexity Maven, says moves at 172. It moves at 172. If move is at 172, we are yesterday, whether it started in the afternoon or it really set in the evening and overnight hours, if moves at 172, that is the financial system breaking. Move at 140 is the financial system breaking. This type of volatility in intraday, intra-hour price swings and interest rate swings, a human being cannot make decisions with this kind of data. It's too fast. And what do you do when things are overwhelming? You're like, all right, exit the trade, Get out, just relax. And this is exactly what volatility does. And if you don't have something to refer to, you would do the exact same thing. If Ethereum was going between 1,000 and 2,000 on a daily basis on Aave, you'd be like, I can't, I'm threatening liquidation. I don't know what to do. I'm not going to take on any leverage. And that's exactly why volatility deleverages the entire system or forces deleveraging in the entire system. And the way the system is leveraged, and I'm talking about the global financial system, deleveraging begets deleveraging, and you get either an orderly unwind to a degree, or you get a disorderly unwind, which is traditionally called a liquidation cascade of sorts, where a liquidation causes someone else to liquidate, causes someone else to liquidate, and before you know it, you're in a 2022 crypto type situation. Celsius and BlockFi and FTX just caused all sorts of havoc and chaos with regard to liquidation and the exiting of positions and so on and so forth. So move at 172 is insane. And if I see that print, I would probably be like, because I'm already in that kind of position with move at 140. When you really understand how volatility affects emotions at an individual level, and then you apply that in a thought experiment to the world, it's contagious. It's fear and panic, and it just threatens the stability of the entire system, where people start to act irrationally from an economic standpoint, which ultimately leads to literally a personal behavior standpoint, the decay of social civility and shit like that, which we talk about often. So that's where we're at. That's what happened. You guys are living through a currency crisis, an interest rate crisis. So the tariffs are a bit of a noise. And I could probably go straight to the end post, and Warren's talking about, oh, the tariffs. So the tariffs, you really got to hear what Besson's talking about, and you got to hear shit from like the 80s and what Trump was talking about. And this is really, tariffs are noise. It's completely noise. Why? Let's take a look. You look at China's currency and you understand currency. If China wants to pay interest on its debt, it needs dollars. How do you get dollars? You buy dollars. How does China buy dollars? They buy it using shit that they make. With all the stuff that's on Amazon sent from China, all that stuff sent from China to Amazon is purchasing dollars. They're using goods. They're using stuff as a currency to purchase dollars. And this is part of what I talked about on Monday, and I've talked about over the years, flipping the script and understanding the other perspective. So they need to purchase those dollars in order to pay interest on their debt. Now, what folks often say is, all right, just pay it with gold. No, that's not how debt works. If I owe you gold, someone wants their freaking gold. If I owe you yuan, someone wants their yuan. If I owe you pounds or euros, someone wants their damn pounds and euros. So when someone owes someone dollars, there's a reason they want to get paid dollars. It's because they probably owe someone else dollars. That's that whole spider's web analogy that I offered on Monday. It's the most intricate, deep spider's web across the entire planet, where every country owes every country, and every corporation owes every corporation dollars in some way, shape, or form. Now, it's not just like I borrowed $100, I got to pay you back $100. No, these are bonds with interest rates. So that not only do they have to, they don't even consider the principal anymore. That's why we have this whole cyclical every 4 or 5 year global refinancing cycle. We're talking about just the interest payments. Okay. So what does the tariffs do? The tariffs blow up the entire system. Now, all the countries, so many countries around the world, and you can imagine all the colloquialisms and talking points that Trump and the administration would use, are coming to the table to talk. Why? Because they understand this. Now, what is the rhetoric and the talk we heard yesterday? China standing firm. They're not coming to the table right away. But that doesn't work because at the end of the day, if we don't sell China dollars with them paying in washing machines and whatever the hell they want to pay with, natural resources, critical minerals, electronics. That's their purchasing currency. What are they purchasing? They're purchasing dollars. If we don't sell them dollars, where do they get dollars? Do they purchase dollars from Europe? That seems like that's going to cause a very similar imbalance that the US is fighting against right now. Why? Look what's happening with the auto industry in Europe. Look at the economy in Germany. China comes in with heavily subsidized electric vehicles. They're purchasing dollars using electric vehicles, and they're like $200,000 electric vehicles, top of the line, cutting edge technology, and they're selling them for 90 grand. How the fuck is anyone going to compete against that? So they undercut the entire system. Now, in reality, the only reason those vehicles are being manufactured and sold for 90 grand is because of heavy subsidy and intervention by the Chinese government and the monetary authorities. Otherwise, that price point would not be achievable. So they're coming in at these incredibly competitive price points, which is not just competitive, it's completely decimating industries around the planet and driving down prices. They're exporting deflation because them internally they have to inflate because they have deflation in the country as their real estate market completely collapsed. So they want to take that deflation that they're experiencing, they want to get rid of it. They want to export it. So they're subsidizing, increasing currency supply internally, allowing the manufacturer of these cheap goods and services to export them, which is exporting deflation by them inflating their currency supply. And that brings us to literally the talking points of Besant and basically Trump in his more elegant form in the 80s. He was much, well, that's understandable. He's much older now. And so probably the best way to understand, aside from being angry, and I'm not person to say I'm in favor of how he presents his argument nowadays. It's quite controversial. But if you listen to his old material, he was quite articulate, and it was a heavy hand. It was cutthroat. It's business, not personal. It's not business. All right, great. That's what this world needs. Is that type of perspective and opinion and mentality and direction because it's not easy in geopolitics land. That is not a game of personal relations. Geopolitics is not a game of friends. Geopolitics is a game of um, you keep your friends close and your enemies closer. Geopolitics is a game of, yeah, we're your friends until we're not. Geopolitics is a game of leverage, control, leverage. I emphasize leverage. That's it. Because this is everything at the end of the day is always a fight over one simple fundamental reality: resources, which come in two forms: natural resources and productivity, labor. So, frankly, China undercut both of them: natural resources, pricing of goods and services, as well as labor for decades. Um, so, I don't know what plays out. Anyone who says they know what plays out, there's no way to know. But I don't see how not capitulating works. I don't see how not coming to the table works because of the interest payments they owe. And that's every damn country. And that's why so many countries are coming to the table. If you jack prices, the tariffs on everything, that decreases consumption. We're the world's largest consumer in the United States, which means we are selling less dollars. We are exporting less dollars out of the United States. Is the interest payments coming down? Is the amount of dollars other countries need coming down because of what they opted into, this debt construct, the euro dollar market? No, it's not coming down. If anything, it's increasing. And frankly, this is 2025. So that shit needs to be refinanced. Not only is the interest payments not coming down, the whole thing needs to be refinanced at higher rates, which means more dollars are needed, not less. Which is absolutely insane to think about the magnitude of dollars, the increase in the magnitude of dollars that are needed going into this refinancing cycle. And we're literally reducing consumption forcefully using this tariff mechanic. Now, I remind you, all of social media and mainstream media and a lot of politicians are lost in the noise. Oh, the tariffs and it's going to bring up prices. No, this isn't that. This is what's being executed right now, ladies and gentlemen, is a geopolitic, global geopolitic power play where the United States holds all the economic cards. Now, clearly, there's a variety of negative repercussions that could play out, and it could get kinetic. China invades Taiwan, and or the that's exactly this is exactly what played out in World War II. This is why Japan entered the war and executed their maneuver. It was about natural resources. They did not have a capacity to meet the needs of their population, so they went imperialist and started snatching up territories to get what they needed. And it got ugly, very ugly, but that is why. That was the reason why. In the end, it all kind of reduces to simple realities of human nature, these fundamental components of why everyone does everything. It's natural resources and it's labor, and which we have created this reality of economics that obfuscates that reality. So media gets lost in the economics, which is the noise. And it's important to understand the signal, which is what the economics is obfuscating. So as I said, and if you're on X or on YouTube, hit some commentary. I'm more than happy to talk about anything on your mind today. And we'll come back and we'll draw some nice conclusions. As Charlie Munger said some old words back in the day, which I retweeted, which is a great video. If you didn't see it, somewhere in here. You look through my profile history and you'll see my past posts if you don't follow along on X, but this is in there. Um, it is in many regards much simpler to understand the fundamentals of what's going on rather than the complexity trying to look at the noise. And it's not that. Where's my screen? Lost my screen. Like this is just noise, noise. But you see, this is the reality. The reality is the vast majority of people literally live plugged into the matrix of economics. So they're like, oh my God, interest rate, the, my bank or my social security. They don't understand the structure of the system. So they're literally glazing the surface, accepting the programming of what's actually going on. Like clearly this is important stuff to a degree, but this is what folks would best describe as telling a story that the vast majority that cannot understand reality can understand because they can understand this story. So they're placating. They're talking the story that the masses can understand. Now, anyway, that gets complicated. I don't like to get political. It's just the politics is about power. How do you acquire power by telling a story that people could even begin to understand? So tariffs and price of things goes up. All right, great. That's the first order. Second order, if the price of things go up, that means people are buying less, which means we're exporting less dollars. And so what's the economic situation in other countries? And you're like, oh, can China afford to import less dollars considering their debt burden and interest payment obligations? No. Oh, so this is a geopolitical. Power play. Okay, so this is all noise for a person such as myself. It's like, all right, what's the second and third order knock-on effects? Anyway, this guy's on an absolute fire. I don't know where he came from, but he's like quadrupled his followers overnight. He's responding to everyone between Brent and just everyone. And he's killing it too. It's just like, oh yeah, that's pretty damn good. And that explains it. So he's where I got convexity. May have been talking about move at 172. Oh my God. Do I have to say again if move is at 172? So here's my takeaway. And he's doing some actual great interpretation of Besant. I mean, the Treasury Secretary is on fire with telling us actually what's going on. He's really clear and understandable, and it makes complete sense. Um, for better or for worse, this is what's occurring. Now, I talked to a friend last night, and he gets lost in the noise. He gets lost in the noise so much, and I'm like, all right, great. What are you gonna do? And then he's like, so, but he's smart. He's in financials. And then I'm like, all right, great. And he doesn't have an answer to what are you going to do. And that's because he doesn't consider the second and third order effects. And it's fascinating because he's in financials. It's like, why are you getting lost in the first order? Why are you getting lost in, circulating narrative? And he's like, got a point. And that's, that I appreciate those types of conversations more than anything because it's eye opening. It's like, oh, that's what's going on. It's a long-term play. This, Bojangles really hits it nicely. This is a restructuring of the global economic order right now. It's real. You know, there's no going back. It happened already. It's like it's like this post, and that's why I post stupid posts like this because maybe I'm just venting. But for me, it's like this is my takeaway. So people are like, "Oh, it's going to start a war, or prices are going to already happened 2 weeks ago." Get it? All of this already happened. There's no, let's get the House and the Senate to turn off the tariff. No, this already happened. There's no undoing what has been done. He was talking about the swap spreads about a day ago, 21 hours ago. A lot of witnessing. Everyone turned from tariff pros into the basis trade pros overnight. But meanwhile, no one's investment pros anymore. I mean, crypto Twitter, crypto X is completely silent. And that's very much consistent with the status quo. Shake everyone out, everyone's gone, and the majority lose, and the few remain. And then my brain would be like, oh, that's why we have our rules. Rule number one, rule number two, rule number three. This was a key one. Visualization of what's going on in economics. This is a full-on global macroeconomic table flip right now. Right now. The economy can get a good look at a T-bone by sticking its head up a bull's ass, but wouldn't it rather take the butcher's word for it? I don't know how old you guys are, but that's some Tommy Boy shit right there. So I was coming back to maybe stuff that's more relatable. Investments. I can't play the audio through the stream, or maybe I can somehow. Anyway, just pull it up. Listen to Charlie, which is in many regards Buffett's mentality, and he's probably shifted a little bit as of late, but probably not at the only at the margins, not at the core. He killed it. I mean, just it's brilliant. You know why it's brilliant? Because it's simple. And it's just it's literally rule number one, rule number two, and rule number three. And the price is irrelevant. What's pertinent is the second order, the third order, and where the entire macroeconomic system is heading. I'm talking to my friend last night. I'm like, he's like, what? He's asking me, what am I doing? Are you selling everything? And I told him, no. Told him I understand macroeconomics. I understand there's going to be distortions in domestic U.S. investment, but Bojangles and Brent go into that in a bit of detail. Like, does the investment landscape shift out of the U.S.? All right, great. We have a history of that. We have a history of what's called the emerging market cycle, where capital flows into the U.S. and capital flows out of the U.S. Great. I've talked about that. So my 2 cents is independent of what it plays out. I expect a cyclical rotation of capital. So you have rotation internally inside of the US from overpriced pig shit equities to more value investment, to healthy balance sheets and manufacturing, mining, refining, and things that are important that we should be doing home domestically. So that's part of mainstream media's narrative, repatriation of supply chain, collapse of globalization. That's part of it. But aside from internal capital rotations, the rest of the world needs a whole lot of dollars for debt interest payments as well as capital investments. Now, it's overdue. The world is overdue for an emerging market cycle. And this isn't the crypto market. I'm talking about it's crypto's an emerging market, no doubt. I clearly stated that. But emerging market cycle, you'd have to look back at different data that I don't have right now, but it's probably like 20 years overdue. And even if you just look at like backup batteries freaking out. I hope my computer doesn't turn off. I definitely need a new one of these. All right, let's turn up the audio. If my computer dies, it is what it is. Come on. No joke, my backup battery just literally died. That's very unfortunate. And it's making a loud beeping sound, which I cannot stop. Fun times. All right, I'll try my best to maintain focus and attention until everything turns off on me. So if you just look at the DXY and you zoom out to the 6 month, you guys know this chart all too well. Strong dollar begets capital inflows into the United States. It means the emerging market cycle is appreciative outside the US and appreciative inside of the US. So we've been in a dollar bull market since 2008. So without having, like more specific emerging market data, this is a decent proxy to consider. And this is why I say dollar down over the next 10 to 15 years. Capital outflows outside of the US to shore up and facilitate debt refinancing and interest payments and allow the system to continue. As much as we want to rebalance trade and we want to repatriate supply chain, you still need an international economy. Every can't everyone's dependent on everyone. It's still a human race. So the exporting of dollars will still be critical, absolutely required, and it's due time for that exporting of dollars to change as what's going on with administration policy, but also to potentially increase, actually allow the system to continue outside the US with considering one, how much needs to be refinanced, and two, the interest payments associated with what needs to be refinanced. And the only way that happens is the dollar comes down in value. And this is exactly what the administration has been saying since day one. They want the dollar to come down in value. They literally have explicitly said this, but they also want to reinforce the role of the dollar. So how do you achieve that? And that's exactly why they're doing what they're doing. They're strong arming, table flipping the entire global economic order so that they're potentially in control more of the dollar's relative value, bringing everyone to the table. All right, here comes a global economic, you know, not trade deal, but monetary deal, which allows the US to have a capacity to devalue the dollar without other countries also devaluing, which means this chart would literally go nowhere. They need the dollar to come down in value. That's not the US. I'm talking about the entire planet. But there's the deal that has been brought together between everyone thus far until China. And China basically is in a box considering their debt interest payments. 10 to 15 years dollar depreciation, which means this is by far the best investment landscape I've ever seen from an emerging market standpoint. And that brings us back front and center to the crypto markets. As I told my friend last night, this is the best investment landscape I've ever seen. These are pink sheets, pre-monetized, and you know all the hyperbolic commentary I could offer with regard to how incredible crypto is from a financial product and service standpoint. Literally is banking. Isn't that the biggest takeaway? So then we go back to Charlie, and Charlie's like, all right, price is irrelevant. And if you can't handle the price, you probably shouldn't have invested. And someone asked him in that video, go watch that video. They said, when do you exit? And Charlie was like, exit? Bought them. I want to see what they do. I want them to succeed and I want to see their future. And that's my rules. Rule number one, rule number two, and rule number three. I want to see what this becomes. I want front row seats. I bought it for a reason because of this entire story I tell. And in 5 to 10 years, I expect good parts of crypto, fintech, the businesses, to become major players in global economics. And they're coming in at less than $1 billion market cap, some of them. Oh dear Lord. Oh dear Lord. Oh my God. Anyway, so I'm more excited than ever as we're on stream and curves ripping 11% of the day back up to 50 cents. Back up to 50 cents. I mean, come on, it was just at 42, 50, it was at 60, it was at 50. It was just at a buck 40. It's down over, was it over 50% from that local top, but that's irrelevant. The top is irrelevant. The tops are irrelevant. What's pertinent is the lows. Not going to get anything from a 6 month chart. So from a low standpoint, I still keep the smiley face up. I'm not too big on technical trends. It's an inverted head and shoulders in many regards, and you need to get much higher to confirm, and you need to get much lower to invalidate. But this is an interesting level, which to me says this was an aberration. This was a long time for it to be below the 36-cent line, but it was. Now we are above it. So this is quite constructive. This is a strong bottoming expression as I see it. So this is, for me, an owner, as Charlie Munger describes, this is comforting. This is further confluence and reinforcing that, okay, great. This is exactly what I want to see. This is the company I want to own in the industry and the market, an emerging market that's pre-monetized. So for a guy 51, ooh, good price action. So for me, I'm just more excited than ever. Everything else is noise when you understand the way the global system works. Bitcoin pumping to 80. Jesus, look at this little ripper we got today. Equity indices green. Ooh, go back at 3,080 real quick. 94 points to the upside. Jesus, 95. All right. Before my battery dies and I got to figure out this backup battery shit, let me try and do some commentary and see how much I could do. Eunice in the house. Good morning. Sakatsu's in the house. How are you, my friend? Arrow, have you ever felt this much uncertainty in crypto markets before? I've actually had more certainty right now because there's only one way out of this, and that the world needs to refinance their debt. China needs to pay their interest. All right, the U.S. flipped the table, flipped the economic table. Everyone still needs to do the exact same thing. I don't have. I'm actually more confident than ever and more comfortable than ever however ironic that may seem. Hope that helps. The advisor, good morning, everyone. Much a pleasure. Peter P. John Steps, looks like China started selling the used treasuries. Yeah, but that's only at the margins. It's like 50 bill, 750 bill in notes. They could sustain that for a period of time, but guess what? It's an exhaustible supply of capital. And that'll drive the dollar up. That means to get their interest payments, they need to buy more expensive dollars. And to top it all off, if the tariffs proceed like this, that means their dollar receipts are going to collapse because consumption in the US is going to collapse. So kind of backing themselves into a corner. This is going to be one heck of a thing to in history. Play by play, it'll be interesting because we'll see what I can offer in that regard. I know there's much smarter folks, but this is going to be very interesting to see how it plays out. Jordan, bond yields have remained elevated though, keeping the dollar up with no single reversal. Well, you're looking at intraday maybe. Structurally, yesterday was a table flip of the global economic order, and there's some serious power plays going on and deals that really resonate at a global level, at a global currency level. This is a big deal, and it's real. It's right now, and it already happened 2 weeks ago, as my meme that I posted expressed. Curve is ripping, Eunice. Yes, indeedy. Brian, morning cap, blood in the market. We are back. I mean, it's not really blood in the market. Everything's really, really green, but this is exactly what markets do. They shake people out. People have all this uncertainty and this fear unless you have a broader understanding of global macroeconomics. And then maybe the few find comfort, and the few own bottom. The few hold when bottom rips 10x. It's just like boom, in a week you're up 10x on the money in your entire portfolio. And that, my friends, is just the mean regression. That's what's so weird because this is such a microscopic emerging market. That's just the mean regression. It rips 10x off of the bottom, whole portfolio in a week, and then it just for months and months and months, it's just bleeding and grinding to the upside. If you haven't lived through 2020 and 2021 or 16 and 17, that's kind of what these markets do, except now there's such a stronger narrative, an actual component of global economics, crypto, fintech, enterprise, products and services, the five businesses of crypto. A whole different story this time. It is different this time in so many regards. John Steps, I know Arrow has been out of your range most of the year, but how do you feel about Arrow? It's one market. I have no interest in having exposure to one market. I want exposure to many markets. There's too many protocols that offer you exposure to many markets. Even Ramses and Arbitrum, no matter how beaten up that's been and how horrible the economics of Arbitrum look, afforded us free exposure to Sonic. And in that regard, whatever. I'm interested to see what plays out. It is was an expense because it is purchased and paid in full, and I'm more than happy to be along for the ride to see what plays out with the team. I have no interest in exposure to a specific market. My investments are primarily centered around being able to purchase one thing that offers exposure to many things. That way, I'm able to get the biggest bang for the buck because I only have a limited amount of capital. Even a billionaire has a limited amount of capital. So, frankly, the objective should always be to get the bang for the buck, buy one thing, but have exposure to many things. In that regard, Velodrome is still way up there, giving exposure to the entire optimistic super chain. Has nothing to do with price performance or decay and liquidity. The optimistic super chain is irrelevant. It's all noise. What matters is what it could potentially be 12 to 18 months from now. And that's a famous Druckenmiller type thought. You're you own things based on an outlook from 12 to 18 months. It's notable that Druckenmiller is a midterm trader, not short term, not super long term, but midterm. But he's a trader as compared to the alternative mentality of a Buffett and a Munger, which is an owner and an investor, which is why I talk in terms of purchases, not positions, which resulted in basically my rule one, two, and three. Um, all right. Keep your head on a swivel. I'll keep on X and do what I do, understand the markets to the best of my abilities. I'm going to wrap this up and keep it short before my backup battery wraps it up for me. So I appreciate you all stopping by. Damn, 13% on the day. Even Convex ripping 10%. It's good to see. Wednesday, April 9th at 1:30 p.m. 239 people made it to the end of the stream, and you are all now a little bit more rational because of it. I hope you all have a wonderful day. Try and keep calm, stay rational, look at signal, don't look at noise. There's always second and third order considerations. And news media headlines, especially mainstream media news, is just first order. Those types of headlines are designed to market and capture attention and tell a story that the general public could understand. But that's not what you need to understand. What you need to understand is the second order and the third order. What is the implications? What are what's called knock-on effects of the first order bullshit that is dished out for the vast majority to get emotional about. So the last thing you should ever do is get emotional about markets. Emotions have no business in capital management. I will see you guys and gals later this week on a Friday. Until then, peace.